Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is David Keller, chief market strategist at StockCharts.com, for a technical update on the major averages as well as a preview into bank earnings. David, it's great to meet with you. Welcome to Trade Talks.
Thanks so much, Jill. Good to be with you.
All right, David, let's start with the S&P 500. Are we still in the rotation trade?
Absolutely. I mean, I think what you're seeing in recent weeks, and especially follow through today, you have strength in growth stocks, technology stocks, and Nasdaq 100 breaking out finally after testing significant resistance. But the cyclical sectors, things like financials and others, weakening on a big earnings week for a lot of banks. So you have sort of that situation today with strong technology, strong sort of growth, weaker value, and overall that's netting out to an S&P still sort of in, I would argue, a rotation phase. I think as we continue to see choppiness in interest rates and a bit of a pullback in rates, we'll continue to see that rotation.
So if we take a look at your chart here, the Nasdaq 100, of course, sitting at close to all-time highs, do you see continued upside?
So the question is, what's the sustainability of this breakout and growth? And when I'm looking at a chart of the Nasdaq, I'm seeing what potentially looks like a big double top pattern. And a double top pattern is a very traditional technical pattern where essentially you hit a level, you pull back, you hit the level one more time. And the question is, do you have enough momentum, enough buying power to push above and go to new highs? What we're seeing today, as we're recording this, is the Nasdaq seeing that positive move, seeing growth stocks working, seeing the components move higher. The question is the sustainability of that move and how strong that's going to be. I think the question is, do we remain above this level? Around 13,900 is the high from February. We're able to remain above that. I would argue overall, I think we're going to see some general weakness in stocks as we digest earnings this week and into the coming weeks. And that could push the Nasdaq back below that key resistance level. That's the level to watch, though.
All right, let's talk about earnings season. Banks kick it off this week and have had quite the run with interest rates moving higher in 2021. What are your thoughts on short and long-term moves in rates?
It's a great question. And when you look at the relative performance in the financial sector, it's literally a chart of the 10-year and the yield, right? And so the strengthening in the yield configuration, the weakness in bond prices has been what's propelled a lot of those banks to make new swing highs and show a lot of relative strength. A lot of that's changed in the last couple of weeks, right? In the last month. And so you've seen stocks like Goldman Sachs and JP Morgan and others pulling back, sort of testing support. And the question is, what's the next step in rates? When I'm looking at a chart of the 10-year, you have what's called a bearish divergence. And this is where the price, the yield is going higher, but the momentum, called the RSI, which is a measure of just the strength of the move, is actually sloping downwards. And so what that tells you is rates have gone too high, too fast. You'd expect a pullback, and we're certainly seeing some of that today. The TLT, the bond price chart, is sort of that yield chart flipped upside down, obviously, and we're seeing a sell-off in bonds today as it's coming off what's called a bullish divergence as things go higher. So overall, I would say rates in the short term pulling back, and the question is, what is the longer term move? The 50-day moving average on the 10-year is around 150, and I think we would remain above there, and I think we'll see higher yields going in the coming months, which should be a nice tailwind for financial stocks.
And finally, Goldman Sachs reports before the open on April 15th. What levels are you watching there?
So Goldman is one of the best charts to watch in the financial sector. I think with a lot of these, you've seen the pullback in prices. If you look at the last 6 months, you saw a consistent pattern of higher highs and higher lows for a lot of those bank stocks. You saw the relative strength lines improving, showing at how they were doing so much better than the average stock, right? Just outperforming the market. A lot of that's changed in the last month. You've seen the relative strength come down on a lot of those bank names. You've seen Goldman Sachs come back to its 50-day moving average. And a lot of institutions will use a 50-day moving average or a 10-week moving average. It's just a general sense of the trend. As long as we remain above the 50-day moving average, overall, things are not getting that bad. If you see stocks like Goldman Sachs break below their 50-day, on Goldman in particular, it's around 315, which would be the lows from the last month or so in March. If you see it break down through those lows, break down through the 50-day, I think you'll see a lot of flows outside of or away from the financial sector that could cause some further short-term weakness. Long-term, though, I still think the story is pretty strong for the financial sector.
All right, David, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.